Good morning, this is Ron Brown. I'm recording this on the 9th of January 2021. This is a market analysis using HGSI investor software, and I'm going to point out a few things to you. The program, by the way, I'm recording this both as an introductory for new users and trial users to the Insider Club, and for Insider Club members. Now this video will be replaced occasionally for the trial members and those new to HGSI who want to learn how to use the program. But it's going to serve a dual purpose today, and it'll be posted both directly for Insider Club members and then also as a video in my playlist. And like I said, I will be updating the playlist occasionally. So let's just take a look here, see what I've got. Now, the way HGSI is set up for new users, it's got reference groups, custom groups, smart groups, and so on. But down here, over the years, I've added to this. This is my market analysis user group. Now, there's a lot of folders in here, and they all serve some sort of purpose. But I'm going to be concentrating on the major markets plus this morning. Maybe I'll get into the ETFs. But let's go to the major markets plus, which contains these ETFs and regular indexes. I call it major markets plus because not only does it have the standard indexes, but it also has some ETFs to give a better feel of what's going on. So bring this up here, and I've added some ETFs here that are probably familiar to those of you who follow the market closely. The ARC ETFs. This is where a lot of money has been flowing for quite some time now, and you can see that there is a lot of strength. Now the market closed once again at an all-time high yesterday, which really seems contradictory since there are so many problems in this country with COVID, and also the assault, the ransacking of the Capitol. But that none of that matters when greed is involved and when money has to flow somewhere, and so consequently we are seeing more and more money flowing into the market. Every little dip is purchased. If you look over here at this high, this is a percent close to the 52-week high. For some reason, this is named pseudo S&P 100 index. It's not pseudo, it is the index, but you can see the percent close to the 52-week high for it, for the Nasdaq, Nasdaq 100, the composite 15. Here's the S&P 500, and down the list. And what's down at the bottom, of course, the UVXY, the Ultra VIX, because volatility has really fallen. It continues to fall, and it's clear down at a very low level. Now this is sorted now on the percentage price change one day, and you can see what's happened with gasoline over the past few months, the last 2.5 months. Here's the low. Notice that it was coming off the bottom with an effort to rise, had a nice move up, and then it consolidated here, moved up. It formed a higher low. I'll put the crosshair on. Here's a higher low than this low, and then a higher high when it broke past there, and then it continued to form higher highs and higher lows. Now this is just an example of combining ETFs and the major market indexes to see where the strength is. So where's the strength today? It's in gasoline, these ARC funds. Here's the oil fund. Let's look at oil. You can see very similar pattern, of course, as you would expect. And I'll go back to this ARC Innovation ETF. You can see the strength here. And Friday's action with this candle. I'll zoom in, or I'll make this full screen. Zoom in. You can see that as it gapped up, there is indecision here. This is a spinning top. We're getting this circle in the center is a transfer of ownership, which means that the price did not hold, and you can see long wicks on either end of this, and then there's a VPA flag, which indicates an upthrust bar, and it didn't hold. So with this extreme volume here, even though the market is hitting new highs, in this instance, using this ETF, I would be a little bit cautious going forward, because this shows that people are jumping in, maybe people who have been on the sidelines, a lot of money, and if they chase this up, those who bought near the top, they're down for the day. Those who bought here obviously are still ahead, but this is a warning sign, so just be careful. It doesn't mean the market's going to turn. I'm not going to go that far, but I've seen too many of these over-exuberant markets that ultimately end up selling off and selling off quickly. Now, there's a lot of danger ahead with the inauguration coming up. I've been listening to news reports this morning, and evidently the radical right is planning more demonstrations and maybe even some sort of move on Washington, D.C. during the inauguration. So there's a lot of risk in this market, even though there's also a lot of complacency. Okay, now, so this is top down analysis, major markets plus. I added the GBTC. We don't have Bitcoin in the database, but I wanted to have a representative ETF. You can see that on Friday it did gap open and close down, but as I look at Bitcoin this morning, it continues to go up. Now the predictions for those who are long, it's going to go to 100,000, 200,000, $1 million. I mean, I've heard all kinds of projections. Who knows? But it, that's where the money is flowing right now. But risk is high here too. I want to show you what I did this morning for those of you who download my add-on. Bring this up. Now this is an installation. I'm using my secondary computer here, and I just installed this new version of HGSI, and these are the other warehouse views that are installed. I generally delete everything but mine, but since this video is serving a dual purpose to show new users and also for a Saturday morning report, I'll just leave those in there for now. But I'm going to go down here, and I'm going to select top-down analysis. I put this in this morning, B and C, major markets, no ETFs. I thought it would be nice to be able to get an overall view using the ETFs, showing the relationship of these ETFs to the standard indexes, but now I want to isolate. So I click on B, and this shows me only the major markets indexes, even though I'm in the major markets plus folder, because I've eliminated the ETFs. So where's the strength? Based upon the percentage price change one day to day, it's in the Nasdaq 100 as of Friday's close, and the composite, and the utilities. And let's go over here and look at the 52-week highs. The utilities are down 11.7% from the 52-week high, but they were up yesterday. So maybe that's indicating a little bit of caution too. I don't really know, but it's something to look at. The point is, with HGSI, we can look at all these things and just get a feel for what's going on. Now, if I want to drop down and look at just major market ETFs, I could go back here, top-down process for ETF analysis. So go to the end of day, and it shows these ETFs in the folder. Now looking over here, look at this ARK Innovation ETF up 3% yesterday. This is the one where that I had up, which is showing potential Turning point, I say potential because who knows what's going to happen. Here's the Internet ETF. But look at these numbers here, 3%, 2.7%, 2.6 on the oil fund, going down to the Nasdaq QQQ, which represents the Nasdaq 100, up 1.3%. So this ETF more than doubled what the Nasdaq 100 produced yesterday. What's down at the bottom? Silver, gold. Now gold, a lot of people were saying gold looks really good, but look what happened to it after this move up. And this was just the beginning of the year, and look at it yesterday, how much it fell. How much did it fall yesterday? 6.14%. Down 3.4%. Let's look at silver. Same thing. Silver was really looking good. This just shows you the risk, and when complacency sets in, you have to be aware of what can happen. Okay, I'm going to click on my designer, and you can see that I could work my way all the way down here through these ETFs. I'm not going to do that. That's something you don't want to sit through a long video, and you can do that on your own, but just use the same techniques. Just let me bring that back up. Let's say if you're interested in the Direxion ETFs, just go down there, use the ETF end of day. You can use the intraday during the day, click through to it, and you can see where the strength was. Now, remember, I was just looking at gold, and it fell off sharply, and look where look at what the Direxion Junior Gold Mine Bear 3X did yesterday, up 11.18 cents. This is percent. This is, of course, trading inversely to what we saw in when looking at gold. So there's all kinds of things here you can look at. I'm not going to go into depth just for saving time, but I'm going to do one more thing. I'm going to go down to industries, and I'll click on that, and then I need to go to a different view. I'm going to go down to top-down scorecard views for HGSI indexes. I'll just go to the basic view, and what's the percentage price change up yesterday? Other financial services up 14.8%. If I go to number 3, which is what I use most often, this shows me the advancing issues during versus the declining issues on these two columns right here. So where were the advancers versus the decliners? Rail freight had 6 advancers and 0 decliners. You can just look down this list. Marine shipping, so let me bring that up. That's been strong lately. I've been seeing these coming up. I haven't taken any trades in that group, but what top-down analysis in HGSI does is it really lets us look at both the overall structure of the market, and then we can move down to other levels and see what was really happening at the group level. Let me go to Internet-based services. I'm going to change to the industry group. If you go down here to number 7, I'm sorry, I meant number 6, scorecard stocks end of day, top down from indexes. Using this, I have what's called a combo ranking for people that are new at HGSI, and what it does is it puts the stocks that best fit these warehouse fields at the top of the list. So it shows the demand. Now here's a stock EXPI, got a really nice run and then a sell-off, and then it consolidated here, and yesterday on heavy volume there's an effort to rise VPA flag. So this is the internet-based services. You can zero in on any of these and see where the strength was and see if you want to put a stock in a watch list. I'm going to go back. If you want to look at these intraday, do the same thing. Look at the groups. You can look at the intraday prices. Obviously, I'm doing this on a weekend, so I don't have the intraday prices updated, but we have all kinds of options with this program. Now, I'm going to go back to my Major Markets Plus folder. I look at this folder a lot, broad market indices, and I go top down from there. I'm going to click through to that. Now, I need to go back up here. I can either look at number 3, I can look at number 1 for the percentage price changes based upon these indexes. And by the way, when I index, as I show in an earlier video, I index for 2 years rather than 1 year, and I use market cap weighting. So if you're trying to duplicate these screens, you need to make sure that your settings are the same as mine, and that's in an earlier video in the playlist. Now, what do I use these for? Well, I look at the indexes, and I want to get another feel. I'm getting about the same results, of course, as I got in the earlier portion of the video when just looking at the indexes themselves. But these are HGSI indexes, and I'm going to take a look at the Nasdaq 100. I'll bring it up, and I need to double click on that. And I have 2 charts here. As you can see, I'll make this a longer chart. Make this a longer chart too. This is the weekly chart that I have, and you can see what has happened since the March low with the Nasdaq 100, and this is what has happened with the daily chart. Here's the March lows, and this stock, or this group of 100 stocks, has just continued to move higher. Very steady here, and then we had consolidation. It certainly looked like the market was going to break down, but no, money kept flowing into the market, and this is where we stand now. Now, I like to look at just regular charts like this, but I primarily look at these charts that I put together several years ago, and these are the HGSI index charts. There are 11 of them. I don't look at every one of them every day. I'm going to look at number 1 here. And over here I'm going to alright, I'll just drop into here and I'll locate these charts here, index charts. I'm going to actually use a couple of charts here. This one, and then I'm just going to go down here and use this one. Now these are the charts that I like to use the most. I'll just make them larger so we can see them better. Because what it does is it looks inside the indexes and uses the advancing versus declining information and the volume to give me insight into what is happening. Now, this one on the left, you can see that I'm using the Nasdaq 100 index, and this gives me the percentage of the 100 plus. I think there's slightly more than 100 in there right now. Stocks that are above their 20-day moving average, and this is the actual moving average, the red line, above their 30, 50, and 200, and you can see that these stocks within this index have been holding well above the 200-day moving average and the 50. On the short term, you can see it dips and then it goes back up, and they're headed back up again. Now this chart over here, when Ian and I were together before he passed, and this is something that I came up with, and it's actually held up very well over the years because it uses indexes based upon price and volume. The fields that I use are advancing versus declining issues, 5 to 1 and 3 to 1. If it's at least 5 to 1, you'll get a dark green. If it's 3 to 1, you'll get a light green. Same thing goes for advancing versus declining volume. Light green is 5 to 1. I'm sorry, dark green is 5 to 1. Light green is 3 to 1. And then I use the force index 13-day. It's averaged over 13 days, and that is today's price minus yesterday's price times today's volume, averaged over 13 days. And then there's a 2-day version of that. So if everything is green, and if we had dark green up here on these, I would get a dark green bar in this line because all conditions have been met. I forgot to mention the volume point of control 1010, which is also green. So if these were both green up here, this would be dark green. But we're getting another buy signal here. It's late in the game. Let's go back here and look at where all these conditions were met. You can see, if you look up here, everything was dark green as it was coming out of here. And that was a big up day for the Nasdaq 100, and that was a strong buy signal. It moved up, consolidated, stayed above the 3 and the 6-day moving averages, and then it moved up here, and it looked like the market may roll over. We had VPA flag here, VPA flag, but as long as the 3 is above the 6, that's generally shows a lot of strength. Here it looks like it may have dipped down, but look what happened. Just turned around, went up. We got a 3 to 1. And so we're getting a buy here. We're really getting a buy here also because these have moved back up. Now let me go to a different index. Let's make this a broader index. How about the S&P 1500? It changes in both windows, and I'm seeing a similar view here. So here's a buy, and this one had green bars. This didn't turn dark green for some reason, but anyway, 2 days of buys here on the S&P 1500. Let's take a look at sometimes these VFB or visual filter back tests just don't trigger quite right, but you get the idea. Look at all these buy signals here on the broader market. All these without a sell signal. Now red's just the opposite. If you get a 5 to 1 down day or a 3 to 1 down day, you're going to get these red. Now yellow means, well, it's all right here for you. Let me go to this yellow here. Yellow means the force 2 is up, the 13 is down. You can see the 13 has not turned positive yet. So this is an early warning sign that buyers are coming into the market. This is certainly not a perfect indicator, as you can see, but it really helps give a visual of what's going on. These are the moving averages of 3, 6, 18, 50, 100, and 200-day exponential moving averages, and you can see there's a strong up move in the S&P 1500. So what do I know after looking at all this? I know that there is a move into oil stocks. It's been going on. The stock indexes are moving up sharply. Gold and silver retreated. There was a lot of talk early in the week about how strong they were, and they were heading up. Well, that didn't turn out. And then looking at these charts, I'd say these indexes are still strong, but I would also issue a word of caution because of what's going on in Washington, and there are just a lot of what I consider overbought ETFs and indexes. I think it's really evident when we look at those ARC ETFs. Money just is flowing into those. Billions of dollars are flowing into those. And a lot of times, many investors are late to the game and they get caught. They just can't stand it anymore when the market's going up, so they lose discipline and just jump in. I'm going to end this video now. I could take you through hours of market analysis, but I'm not going to. So anyway, have a good weekend. Yes, the trends are all up. Be careful, and I'll try to put out another weekend report next week.